Hi, good afternoon. Welcome to the marketplace. Coming up, Bank of Ghana's Governor, Dr. Johnson Esiama, confident that Cedi's volatility will end short of measures to maintain current stability.
Is that the trend continues, but what I can tell you is that the days of excessive volatility in the cedi, it's coming to an end.
Also coming up, IMF dismisses criticism on Ghana's program affirms progress with structural and quantitative reforms.
To be frank, this is not something that we have been discussing with the authorities. What needs to be done to make sure that the program is on track and to make sure that those objectives are achievable. This was really what the discussions focused on.
Also, government sees strong demand for T-bills returning to oversubscription after missing target last week. My name is Darryl Kwao. Details coming up. Well, first up, the Bank of Ghana Governor, Dr. Johnson Esiama, has assured that the days of extreme volatility for the cedi against the dollar are behind us. The Ghanaian currency has shown remarkable stability in recent times, even experiencing occasional appreciation against the dollar. The positive trend has been further supported following a staff-level agreement with the IMF. In an interview with Joy Business in Washington, D.C., Dr. Esiama emphasized that this upward momentum will continue.
How does the bank take this?
Well, it's been broad-based. Remember a number of things. The external sector has been quite strong, admittedly, in the last couple of years. We've seen some strength, further strengthening there as well. Remittances has been doing very well. Gold, gold is the new kid on the block. Gold inflows have been doing very, very well. And also, don't forget cocoa. Cocoa inflows have also been doing quite well. And so on the whole, and when it comes to coordination as well, if you see the way the fiscal has been, has been running so far, that has been supportive, as well. So it's all about discipline. It's all about a strong, external sector. That is what you are seeing on the cedi. Going forward, we think that we have enough reserves, to be able to preserve the stability. But I must be quick to add that we are not, going to operate a fixed exchange rate regime. The cedi is an endogenous variable. It has to be, allowed, to float. It can go up, it can come down. Our, focus is to ensure that it is not excessive when it comes to its volatility. And so we are aware of trends this week. We are monitoring, issues. We believe that the market is resetting. We believe that expectations are being re-anchored. And so we are on top of the game. We are observing it by the minute, and we'll look at it,
Doc, do you think that the market is responding to the good news coming from the fourth review, the reserve accumulation? Because the cedi has seen some strong rallying, even going into this week as well. I know you're already aware. What do you make of this development?
Absolutely. So that's why I said it's a broad-based of factors. The staff-level agreement, it was like a seal of approval that, yes, we are restoring macroeconomic stability, we are doing the right things. And then the fact that, of course, don't also forget that the dollar itself, is weakening as well. But then the external sector has been strong. Those inflows have been doing pretty well. Gold is doing so well now. Our prayer is that the trend continues. But what I can tell you is that the days of excessive volatility in the cedi, it's coming to an end. Macroeconomic stability is a public good. What we have on our hands still is the fight against inflation. But so long as the cedi is, strengthening, then it also makes it easier for us to control inflation going forward.
Meanwhile, the IMF is rejecting that Ghana's program with the fund is under threat and risk ending without meeting critical targets. Here's George Rafa with more from Washington, D.C.
Speaking at a special engagement with a group of Ghanaian journalists here in Washington, D.C., the head of the mission for Ghana, Stefan Rode, noted that Ghana's program with the fund is on track and doesn't see any challenges with it as we speak right now.
If you look at the PFM Act, that 1.5% of GDP primary balance is enshrined in the law. It's not just an objective that is negotiated by the IMF. It is actually Ghanaian law. So that makes us quite confident that this is going to be achieved going forward, and that it will help tremendously with bringing down debt going forward and making the Ghanaian economy more resilient. That will help assuage concerns about debt vulnerabilities going forward.
He was, however, quick that this is dependent on government sticking to the program conditions to ensure that it ends on a good note.
But of course, there is a but, and the but is that the program has to be implemented. So the government has to adhere to the target, right? The government has to implement the reforms that are planned for in the program. This is very important. So it's not just today, but it's in the next few years. The program commitments have to be to continue to be implemented. Certainly 2025, 26, the budget for 26 will be important as well.
He's however ruling out that Ghana may have to extend the program due to the challenges that they are looking forward to in the coming years.
You know, to be frank, this is not something that we have been discussing with the authorities. Because of what we have discussed and the deterioration in performance in 2024, the focus in the context of this mission that just took place was very much on what needs to be done to make sure that the program is on track and to make sure that those objectives are achievable. This was really what the discussions focused on.
The head of mission for Ghana, Stefan Rode, has also been responding to argument on the basis that went to the fund reaching a staff-level agreement with Ghana, looking at the targets for 2024, as well as the forward-looking commitment by this administration.
A lot of the forward-looking component had to do with how to make sure that, given that underperformance, how to make sure that the program objectives remain achievable going forward, and what type of policies have to be implemented to make sure that the objectives are achievable. So we talked about the fiscal situation. We had some slippages. The performance was not as good as envisaged. But do we have policies now in place to make sure that the objectives are achievable going forward? And the response is yes.
The head of mission also maintained that the fund supports government plan to bring in private participation when it comes to ECG and its operations.
Most recently, what we have done with the new government is to discuss continued implementation of these reforms. And what we have heard from the new government is that they are very committed to those reforms and to try to sort out the challenges in the energy sector. They are not going to be resolved from one day to the other because the size of the shortfall is large, but they are very committed to accelerating those reforms and to try to reduce the size of the shortfall going forward and to try to tackle the issue of the accumulation of arrears.
On plans by government to explore the international market, the head of mission for Ghana argued that Ghana is on track and could look at that from 2027.
I believe what we have in terms of assumption in the program is market reaccess in 2027. To be frank, I don't think it's an immediate concern. The program has been designed in such a way that together with financing from the IMF, together with financing from the World Bank, and the government being able to finance itself in the domestic markets, this should be sufficient to cover all of the needs that we have talked about, the needs related to financing whatever is falling due in terms of debt, the needs to be able to finance whatever financing needs are there.
There have been some argument about commitment and spending by the previous administration and what should be done to realize how these payments can be made. Stefan Rode has been given some clarification to it.
And what we have seen for inflation is that the central bank has increased in the policy rate, so tightened monetary policy. And what we are seeing also is that the government has a budget that entails significant fiscal adjustment. I think taken all of that together, it makes us very confident that inflation is going to go down in the next few months towards the program objectives.
There has been current argument about whether the global tariff war will impact badly on Ghana. Well, the head of mission has argued that he doesn't see Ghana suffering that much when it comes to the direct impact.
The current environment has also some positive side effects on Ghana. Think about what is happening to the gold market. Gold prices are at a record high, and so Ghana's external sector, Ghana's balance of payment are benefiting tremendously from the very high gold prices, and this is very supportive of the external position.
The head of mission for Ghana argued and believed that the program is indeed on track if government sticks to the conditions, believing that we will end the program in May 2026 without having any headwinds or challenges that would force us to extend the program. From the headquarters of the International Monetary Fund in Washington, D.C., this is George Yaffe reporting for Joy Business.
All right, joining me on Zoom is Nelson Kujo-Kwagbeji, who is a finance and tax expert, also head of finance at Melbourne Capital. Good afternoon to you. Given the IMF's rejection of warnings about Ghana's program, what are the key factors that could either strengthen or jeopardize the country's ability to meet its critical targets under the current IMF program? And how might these challenges be addressed moving forward?
All right. Thank you very much, Dara, for having me once again, and good afternoon to your cherished viewers and listeners. Well, I think one of the factors that can help in strengthening the program has to do with enough revenue mobilization domestically. You'll realize that over the years, one of the major challenges that we have faced as a country has to do with inability of Ghana as a country to mobilize enough domestic revenue, and that has degenerated into all this borrowing fracas here and there. And so I think that one of the factors that can strengthen the program is for the government to deliberately and intentionally mobilize domestic revenue enough. In fact, the Commissioner General for Ghana Revenue Authority made mention of the fact that as at the end of the first quarter, the authority has outperformed its target for the quarter. And I think that is a good news, because once we are moving in that direction, I think we will be able to have enough revenue domestically to finance our annual budget. And that will eventually transcend into strengthening and meeting some of the targets under the IMF program. I also think another factor that can also help in strengthening the program has to do with the controlled public sector expenditure. And I was personally happy the last time when the finance minister made it clear that when it comes to procurement, it is only the finance ministry that can give the green light, the go ahead to the various control entities to procure up to a certain amount. I think that is also going to help to sort, as it were, to boost and strengthen the fiscal consolidation of the government. So I think these are some of the factors that, in my opinion, can help us to stabilize the program and meet some of the targets under the program. Then, as to what factors can jeopardize the program, I think that when we are not careful and we embark on uncontrolled government expenditure and financial and fiscal indiscipline, that may throw the whole program off board. I listened to the gentleman, the IMF lead for Ghana, made mention of the fact that they are very confident that Ghana will meet their target. Of course, that is what they are supposed to say. But internally, we have to make sure that we are fiscally disciplined, we control our expenditure, we don't spend excessively in order to meet most of the target under the program. Then finally, another factor that can affect the realization of target under the program has to do with external shocks. He was of the view that the global trade war may not have any direct impact, but don't forget, it will lead to imported inflation, and that may also jeopardize our fiscal and expenditure position as a country. So this is my opinion on that.
Right. We've been hearing from the governor of the central bank as well, talking about the city's improved performance and the fact that government was going to put in place measures to maintain the stability that we have seen in recent weeks. What would it take?
Well, I think within the short term, I think the Bank of Ghana has implemented some policies that are yielding results. The first one has to do with the 273-day Bank of Ghana bill that was introduced to absorb excess liquidity from the system, which is an interbank liquidity management tool, of course. And the second one basically has to do with the MPR at 28. These are immediate to short-term measures. But when we are looking from the medium to long-term measure, I think that we can do that by strengthening our forex exchange reserve. In fact, the Bank of Ghana, governor made mention that the external factors are doing very well. I think that we should increase our traditional exports, which he also made mention of. He made mention of the fact that gold and cocoa are doing very well. So I think that we should focus more on our traditional export. Then also, we should also focus more on improving remittances through the fintech, platforms. And also, I also believe that the activities of the Ghana Gold Board is also going to help in the medium to long term to help strengthen the city. I think that as at the end of December 2024, our gross international reserve has improved significantly. It was at 4 months of import cover, but as at the end of February, it was 4.2 months of import cover, and that has actually, boosted the strength of the cedi. So clearly, these are some of the factors that may help in, protecting the value of the cedi and going forward the depreciation of the cedi.
All right, I want to switch topics and talk about the Treasury bills market because we've been monitoring developments from over there. You have an interesting piece about the decline in yields and its impact on investors. I want to first start off with the results from the auction from last week because government recorded an oversubscription of 18.23%, and that's an improvement over what we saw after failing to meet its target last week. Meanwhile, interest rates, we understand, narrowed again on the yield curve. What changed and what does this say about investor sentiments?
All right. You realize that not long ago, the finance minister met with pension fund managers and gave them assurance that their investment with government is safe and that government has the capacity to pay back any obligation that the government has towards the pension fund managers because they are the major local investors in this country. You also realize that the rate of Treasury bill has been very stable for some time now. And as a finance person, stability leads to predictability of cash flow. And also, finally, you realize that government has demonstrated their commitment over the few months that they have been in power. All these things culminated into boosting investor confidence. As you rightly said, government continues to record oversubscription from the beginning of the year. They have been moving away from the market, and up to a certain time, they were recording under subscription until the last two auctions that they recorded. The last auction was 2.81% oversubscription, and the very last one was 18.23%. So clearly, that tells us that investor confidence is gradually bouncing back to the money market, and that government has given assurance that their investment are secured. Government has demonstrated since they took over power that all the maturing obligations have been paid. So I think that it is just the commitment of the government and the fact that investor confidence is bouncing back gradually to the money market.
Yeah, we know that the decline in yields triggered capital flight from the T-bills market. Investors were seeking other alternatives. Can we make a judgment based on what happened last Friday? And if investors are looking for alternatives, where is it safe to invest your money right now?
Well, that has always been a very difficult question, considering the limited instruments that we have within the Ghanaian financial market. You realize that one of the options that are available to investors currently within the Ghanaian financial market has to do with the Ghana Stock Exchange. The Ghana Stock Exchange is doing very well. In fact, as at the end of December 2024, the total market capitalization was a little over 112 billion Ghana cedis. And as at the end of 16th of April, after trading, the total market capitalization increased to about 135 billion Ghana cedis, representing about 21.47% year-to-date, increase. However, the total performance or the global performance of the Ghana Stock Exchange as at the end of April was at 27%, which is little higher than inflation in terms of cedi. And so the Ghana Stock Exchange is an option that is available to investors to look to place their excess fund. It is also important to note that the Ghana Stock Exchange, per our research and data, is currently the best performing stock exchange in Africa. This exchange has outperformed many stock exchanges within the continent. Another area that is worth mentioning is the corporate bonds. The corporate bonds are issued by companies who don't want to go to the stock exchange to dilute their ownership. And so they raise debt on the Ghana fixed income market. So the corporate bonds are also another option that are available to investors who want to, place their excess liquidity. Currently, there are 13 companies that are listed or that have raised debt on the Ghana fixed income market. They have raised about 24 billion Ghana cedis, with anticipation to raise about 36 billion Ghana cedis. So there is also an opportunity on the Ghana fixed income market for corporate bond issuers who wants to raise additional funds, and for that matter, investors who wants to buy some of the corporate bonds.
All right. Nelson Kujo-Kwagwaji, Head of Finance at Merban Capital, thank you so much for speaking to us here on the Marketplace. We'll certainly continue that conversation. Thanks for watching, everyone. More news on our website, nigerianline.com/business. We'll be back same time tomorrow.